expected, the Bank of Korea going for that 50 basis point rate increase. But of course, the question is how much of a catch-up they can keep playing with the Fed, because the rate differential seems to be the main concern for the Bank of Korea.
Yes, that's one of many concerns. And 50 basis point hike has been widely expected because of the way they signaled that they are concerned about inflation in the short term over 5%. And also they were concerned about the prospect of aggressive Fed tightening. But nonetheless, we think that given the fundamentals of Korea, and also given relatively subdued inflation, or a relatively better prospect for disinflation going forward, and the slow economic growth, we expect them to allow a bit of a wider the differential with the Fed rate toward the end of the Fed tightening cycle.
Goohoon, you mentioned the fundamentals of the South Korean economy, and perhaps that was a relatively stronger story in the first half of this year. But we've got chip makers, for example, really the major export item for South Korea. In fact, they're flagging slowing down in the tech gadget, tech semiconductor demands out there. And if that's what they're flagging, where do you see a rebound perhaps for the trade deficit that South Korea is facing?
Yes, right. The semiconductor cycle is going against the Korean economy, and we expect them to get worse before get better. Nonetheless, we expect the current account or trade balance will improve going forward. We expect Q4 current account will be better than Q3, and then with some seasonal downturn in Q1 getting better because commodity price has been falling, and as you said, chip prices are falling, but we think that the pace of a decline will slow down substantially in first quarter and probably rebound in Q2.